Good morning, everyone. It is 6 a.m., half an hour before the market's going to open on Tuesday, June 18th. Yesterday, we had a pretty big move in the markets, and it started out in tech, but as we saw in yesterday's aftermarket analysis, that it actually was fairly broad-based. If we look over here in our sectors, what we saw was that there was a good number of sectors that were above the index average. So in the SPY, we were looking at up about 0.79%. And we had financials, we had consumer staples, industrials, tech, retail, consumer discretionary, all above that average. So it was reasonably large based. And if we look at the charts, we can see that some really big bars moving up, XLY moving much higher, looking like it will maybe challenge these highs over here. SMH continuing its trend, retail large bar but into resistance. XLK large bar upwards, continue its trend, same with QQQ. XLI large bar but into resistance, large bar on XLP above resistance, so maybe challenging previous highs. Then XLF into resistance, defense into resistance, small caps not even reaching resistance, the S&P making new highs, and then we have basic materials into resistance, home builders not quite making it out of resistance, same with the Dow Jones, communications looking like a nice reasonable bounce off of the EMA 20. They did not have a large bar, so they were not one of the sectors that participated in that bounce, but that is a confirmation bar for a bounce off of the EMA 20, so it's still looking pretty good. And then we have XLE maybe bouncing off of the MA 200, maybe. It was still under, it's just a hair underneath. And then we've got healthcare, which no real movement at all. And silver and gold didn't really do anything. Real estate didn't do anything. TLT gapped down. And then utilities actually went down, but into this, I believe it's the MA 1, maybe 90. Let's take a look at utilities. Okay, so down into the MA 50. So what you'll notice is that even though we had a broad-based rally, one day, single day rally, most of what I said was into resistance, or did not participate, choppy sideways. The ones that broke above were maybe XLP, and then the SMH, QQQ, tech, and consumer discretionary. Okay, so even though it was more a broad-based movement yesterday, we still don't have all the sectors looking, or even a significant number of sectors looking very strong and healthy, and it's certainly not spread out. So consumer discretionary and tech, those are all basically QQQ stocks. And then we had a little bit of XLP, or consumer staples. So I'm not going to get too excited about this yet. I would want to see what happens today, and I'm not expecting too much to happen today because we have the holiday tomorrow, and we had a retail sales report today. We might as well look at that, see how that did. Okay, so a little bit better on retail sales. That's not, I would expect the market not to react that much, or maybe go down a little bit, because if retail sales were weaker, then the economy would be weaker. That's more likely that the Fed would actually cut rates. So let's see how the market reacted to that. Yep, not much, barely, and actually down, right? Blipped up, then traded down, and now we're starting to trend barely a little bit down. Let's take a look at our futures and see where we are overall. Yeah, flat. S&P almost no change. The Dow like 5 basis points, and then the Nasdaq also about 5 basis points. So flat, really flat, zero movement at all. So today, this morning, what we're going to want to watch out for is volume. Anywhere where there's volume. Are we going to get volume in the whole market? Probably not. Yesterday, even with that big movement upwards, we did get an increase in volume, but we're still below the moving average. And that moving average has been coming down over the last couple of months, and we still couldn't hit the moving average. So today, it's very unlikely that we're going to hit the moving average. But what we do want to see is there pockets of volume? So for example, if I looked at XLK yesterday, they were a little bit above their moving average. Let's see, how about SMH? Right at their moving average. What about XLP? Below the moving average. So that's a huge move on small volume. What about, what else did well? XLY. Okay, they're at the moving average. Okay, so there must have been something that was above moving average for us to, well, I guess overall we're below the moving average, so not necessarily. Okay, so are there any sectors that are going to get their moving average or above? And those would be the sectors that we would focus on. So let's look at, for example, what was one of the ones that went down, like XLU. Okay, they're below their moving average. So if we start to see volume or normal amounts of volume inside a particular sector, then that's where we want to go and pay attention to. Now that I saw the volume on XLP, I'm going to discount that sector because what happened? XLY, average, XLK, average, QQQ, average, and then let's see, what were the other ones that did well? Retail, we'll take a look at retail and XLI, okay? XRT, well below average, and XLI, I think it was above average. Okay, so this is the only one we've seen so far that was above average, and that was a big move. So that's sort of believable move because that volume is there, but we went smack into resistance. So out of the ones that made it out of resistance, the only other one was XLP. It's well below the moving average volume. So that makes it harder to trust because it's much easier to manipulate prices when we have lower liquidity. So for example, if I'm the only person pushing on a boulder, that boulder is going to move in the direction I'm pushing it. But if there's 3 people pushing on the boulder and all 3 of us are pushing it in different directions, then whoever is stronger, that boulder is going to move in the direction of whoever stronger is. But it's not going to move nearly as much or as far as if those other 2 people weren't pushing it. Now, let's say we have 100 people. Well, the boulder is probably not going to move in the direction of any one person pushing that boulder. There's just too many people involved. So when we have normal amounts of volume, it's a lot harder to manipulate and move prices in a particular direction because there has to be some sort of agreement among a large number of participants in order to get that price to move in a particular direction. When we have low volume, like this is probably only about 70% of normal volume, then it becomes easier for one person or a small group of people to push that price into a particular direction. So this XLP, I'm not going to really trust it. And then that leaves me with basically tech and consumer discretionary. So it is very isolated still. And until we see a broader base participation and we start seeing movement in the Dow Jones and we start seeing small cap stocks lead, then we're not going to get too excited. Okay, so yes, the SPY is making all-time highs, but is it moving anywhere fast? No, it's just a little bit up, chop sideways, maybe a little bit up, chop sideways. We'll move very slowly until we actually get volume back. So today, looks like we're opening flat. Unlikely that we're going to get large amounts of volume because of the holiday tomorrow. If we were going to get moved, then it would have been the retail sales, and that was just a little blip this morning, little blip. And then, so today we'll just watch very carefully. Does any sector get more attention and more volume than other sectors? Okay, so it's probably going to be quite, I know I said that yesterday, but it's probably going to a lot more likely today than it was yesterday that we're going to have a quiet day, because it's the session immediately before the vacation. And then Thursday we come back, we're probably going to just be preparing for quadruple riching. And then on Friday, that's when we're going to see a huge flurry of activity. Doesn't necessarily mean that we're going to get a lot of directionality, but there should be more volume and more volatility on Friday. So we're going to take the volume bar on Friday with a grain of salt, just like we took this volume bar with a grain of salt, because we knew there was increased activity in algorithmic trading and it wasn't really real volume coming in of institutions actually taking a position. So Friday will be institutions reestablishing their positions, not necessarily taking on new positions. Okay, so that's about it this morning. There's really not too much to talk about. I'll take a quick look at everything else. DXY, flat, going sideways. Gold, not, just chopping sideways. I wouldn't be trading gold or silver at the moment. Silver, maybe you could say, is bouncing off of that MA50. We did get a confirmation bar yesterday, but then we hit all that resistance, and looks like so far today we're not going to make it through that resistance. And then energies, so oil moved right into that MA50 and so far hasn't been able to make it through. So if it does make it through, then that is probably going to be a bounce for the energy sector. Even though we're a little bit below that MA200, we could bounce and go upwards. And remember, even moving averages are a region. So this would still be the MA200 or MA150 region in a bounce. But if oil doesn't make it through, oops, and it goes down instead, that would be it. That would be a rejection, or sorry, a continuation, a downward through the MA200, and that wouldn't be good for energy stocks. Weak energy generally is short-term positive for the stock market, but longer term, not great news, because that indicates a slowing economy. So we'll see. I don't want to jump to any conclusions. I would want to wait for a significant movement away from this area. Either it's going to bounce up or it's going to move down. And we don't have anything here really. So there's no reason for us to think that it'll get caught in this area. So it looks like it could just move right back up or move right back down. So we're caught perfectly in between these two spikes right here. Okay. And bonds. Bonds, we had that gap down yesterday. Looks like today we're recovering from that a little bit. Over time, we should see that drift lower, but it doesn't mean it's going to be fast or a straight line there, because we are giving ourselves a month-and-a-half timeline. So as long as we're not spiking up and making new highs, for now, we would call this a resistance level right here as well. Horizontal resistance right there. Okay, so we had a rejection right there, a rejection right there, a sort of rejection right here, and then it was an important level over here too. If I throw up a volume profile, it's basically right in the middle of this big, huge spike right here. Okay, so expect a quiet day, but look for volume in specific sectors and then focus on those. Otherwise, we're not going to expect huge movement, or if we do see huge movement on low volume, then we'll know that's market manipulation and we won't get too excited. So that's it for this morning. Have a wonderful rest of your day, and I will see you in the aftermarket.